Hello and welcome to the stock market analysis. Let's take a look at GLD, which tracks gold. Currently, it's still in an uptrend, but today is gapping down because gold futures are falling. We have a breakout here. You can see that after the breakout here, it's a very nice rise. This is a consolidation breakout near the rising 20 MA. You can actually buy the breakout, put a stop loss and ride it higher. But what I'm interested is to look at a possible target from a measured move point of view. If you take this rise, clone it and project it upwards, yes, the short-term target has already been met, and those who actually bought here should have sold on the way up when it's around here. So at this moment, it is we consider it trading sideways as long as it stays above this area. It's still above the rising 20 MA, so we just treat it as a consolidation. But if it breaks below this area and also the 20 MA, we may see a decline to the 50 MA. Let's take a look at the hourly chart. You can see the lows here with a bottoming tail here in the 60-minute chart. It tried to trade sideways, but then it kept down today. Maybe we'll have a bearish cross. It's still trading above the rising 60-minute 200 MA, so at least for now we should be bullish buyers. But if you look at the support area, if it does not hold, we might just hit the 200 MA and maybe decline to this next area of support. This consolidation is actually a support area. Now, gold has actually risen by quite a lot. If we look at the weekly chart, the 20 MA is rising, 50 MA is rising, 200 MA is rising. This tells us that we should continue to be bullish on gold in the long term. And actually here, it broke out of a long-term resistance. So this was a resistance area in the past. Every time it went up, it go down. Here it even formed a topping tail that hinted of the correction here. And then it rose. Some topping tails can't even move up. Here it found difficulty. It had to trade sideways for many months before breaking out higher. So a very stubborn resistance now becomes a very tough support area. So anytime the GLD drops to here, it will be a very great opportunity to pick up GLD at a cheaper price. Monthly wise, we can see that this is indeed a very strong area. Even in the past here, there is support here. So definitely we are in a very strong multi-year support here. So we do not really need to worry about gold unless it drops below here or here. So long-term wise, those who bought should continue to buy unless it drops way below right here. And the monthly rising 20 MA, 50 MA and 200 MA tells us that long-term we should really continue to be bullish on gold as an investment. This is of investment quality. With all the heavy support here, there is no fear that it's going to drop. This is going to be a very solid gold standard investment. Sorry, the pun there. Gold GLD is really a solid investment. Okay, and those who invest should continue to invest in it. But in the short term, you might see it a bit overbought here, and you have to be careful for those who trade it. Maybe we just take a look at gold futures. You can see how in the weekly chart almost the same. Because GLD tracks it, you can see that the gap down today was caused by this decline here. Alright, maybe because the Dow is trying to bottom, so some may think that it's act as a hedge against dropping stock market, is declining as a hedge. But overall, the trend is still up. We have a bullish cross in the gold futures. If it's still trading above the rising 20 MA gold futures here, the daily chart should remain bullish bias and treat this as just a sideways correction. But if it drops below the 20 MA, you have to be careful. So let me go back to GLD. Okay, just watch this support area and the 20 MA. So I hope this analysis has been helpful to you, and I'll see you in the next one.